Hi guys, welcome back to the channel, and in this video I will create a custom indicator which will show the relationship between moving average and current price. So to explain this idea a little bit more in depth, when you are working with moving averages, the main issue with it is that it doesn't show you the current price. Yeah, that's it. It shows you what happened, but it doesn't show you the current relationship. So when we want to use the moving average, is that what is a good sign is when the price moves in the direction of the moving average. So for example, at this point you can see the moving average goes down, price tends to go down. The issue comes when the price decides to revert back and it does something like this. Okay, so here the movement stops, it makes a higher low right here, and then it continues to go up. But if we check the moving average, it still continues to go down because it shows you what happened somewhere at this point. Yeah, so that's the main issue with moving averages. And I will create an indicator which will show you this relationship, and thanks to this indicator it will be much easier like to spot the divergence. Yeah, the divergence is that price goes down, moving average goes up, so that's the divergence. It will be basically the same concept as MACD indicator is built around. Yeah, basically MACD shows you the distance between two moving averages. Yeah, so if I insert second moving average here, something like 20, the MACD shows you the distance between these two moving averages. Yeah, so that's like what MACD does. It's nothing fancy really, it just shows you this distance. Yeah, so that's MACD, and this will be something pretty similar, but I will take a more statistical approach to this. Yeah, so what I will use is that I will use correlation functions. Correlation functions show you the relationship between two data sets. In this case, the first data set is the moving average values, the second data set is the price action. Yeah, so that's that. So let's do it. So I will go to my IDE, indicators. Let's find the YouTube folder right here, and let's create a new file, and let's call it price MA relation. Okay, and we will need two input variables. So the first variable will be MA length. Okay, so this is what moving average do we want to use, and also we want to the correlation length. Okay, so how many values of that moving average and price action we want to use to measure the relationship, and let's set that to 100 as well. So this is what we need to do. Indicator will be in a separate window, so it will be an oscillator, because if you know about correlation gives you value which is between +1 and -1. So this is the oscillation. Yeah, so I will also set the minimum, which is -1, maximum can be 1, and there will be one simple correlation line, and let's set I don't know, honeydew. I don't know what that color is, but it will do the trick here. Okay, yeah, so what I will also do is that I will straight away add property, so indicator level, and let's add level to 0. Then I will add level to 0.5, because if correlation is higher than 0.5, then those two data sets move together. Yeah, and I will also create level to -0.5, because if it's below -0.5, then those two data sets move against each other. So that's like the idea behind the correlation. And since we are working with the correlation, I need to include the statistical library, let's say. So include math stat normal.mqh, and now we can use the correlation. Great. Okay, so this won't be difficult, I think. So since we are working with moving average, which is an indicator, we need to get the indicator value. In order to get the indicator value, we need to create an indicator handle. So let's create a handle. So moving average handle. And on this on init function, we can do ma handles is equal to ima symbol period. Now moving average period is the ma length. Shift 0 mode, let's go with simple moving average, and price. Or do you know what? Let's go with exponential moving average, because exponential moving average represents the current price better than the simple moving average. Okay, so let's create temporary array. So in this temporary array, we will store the moving average values. Maybe I will change it. Then moving average values and price values. Okay, so now that I think of it, I won't need temporary array values because I only need moving average values. And right here on the init function, I can resize, so array resize ma values to the size of the correlation length. Okay. Moving average and price values, yeah. So correlation length and 0. So this is good. So now on the calculate function, we start with the I don't know, max between ma length and correlation length. Okay. So now we just do our for loop. Okay. So we loop through all of the available historical data. And yeah, so now this will be really simple, I think. So basically now we need to populate these two arrays. Yeah, so we need to get the moving average values and price values. And we need to get, in this case, last 100 values for each of these. Okay, so let's start with the copy buffer. So copy buffer indicator handle is ma handle, buffer number 0, and now start. Okay, so this is some weird. So handle ma handle 0. I don't know where there is start time. I thought that it's like start index and it's date time. I don't want this. I want my normal copy buffer function. I want integer starting position. So for some reason there's this bug. Let's ignore it. So ma handle 0. So this is starting position, which will be rates total minus I. Yeah, so this is our starting position. Minus 1. Yeah. And, or minus I, and count, we want correlation length, and we want to store it into moving average values. And then the second thing we want to do is that we want to use this array copy function. So basically now we take one array and we copy part of its values into the second array. So the destination array is price values. Source array, we will use the close array, which consists of all of the closing prices for each of the candlesticks. Destination start is 0. Now source start is I minus correlation length, and we only want the correlation length. And now let's create a double called correlation is equal to 0, and now we can call math correlation Pearson. First array is ma values, second is price values, and what we will do is that we will store the correlation to the correlation variable right here. And the last thing we need to do is that we need to assign the value to the correlation line buffer array, which will be equal to correlation. So now this should work. So let's test this out. So okay, so it's not expert, it's indicator YouTube. So correlation, how was it called? Was it called price MA relation? Does it work? There's sorry. Now it works. Perfect. Okay, so let me change one thing here, just for us to be able to easier recognize the relationship. What I will do is that I will change the colors. So I will draw color line, okay, and let's divide the colors. So there will be 3 colors: green for positive correlation higher than 0.5, white for the correlation between 0.5 and negative 0.5, and some shade of red for correlation lower than negative 0.5. So color spring green, color white, and color red, just red. Okay. In order to do this, we need one more buffer. So double color buffer. We need to initialize that buffer right here. So the buffer number will be 1, and it's color buffer, and it's not indicator data, but it's indicator calculations color index. And this is perfect. So now correlation or color buffer is equal to, so correlation is correlation higher than 0.5, 0 is correlation lower than negative 0.5, 1, and 2 and 1. Yeah, so now it works. Perfect. So here we can see the relationship between the, I will just delete this moving average right here, and now we see the correlation between the price action and the moving average. So how to read this? So if the price moving average relation indicator is in green, then it means that the price does move with the moving average. Yeah. If it's white, and here you can also like change this into the correlation being above or below 0. Okay, so if the normal way how to read this is that if correlation is between this and this values, or these and these values, then there's no relationship. Okay, so the price tends to move somehow, and the moving average also tends to move somehow, but they are not in a relationship to each other. Yeah. So you would use this in order like to spot the change of the trend. Okay, so once the color of this line changes, and also I don't know if you can see it clearly, so I will change this to width of 3. So let's just, where was it? Price. Now it's better. Okay, so when you see this change in the color, you can say something like, okay, the relationship starts to be different. I don't know how to say it. Yeah, but you know what I mean. So at this point you can say the trend is over. And the nice thing about it is that it shows you before it, like, before it happens, if I can say it like this, because at this point the price is still below the moving average. So if you only relied on the moving average, you would see this as like, you know what I mean. But here it shows you the signal. And also it can be used, so for example, at this point you know that the trend starts at this point. So yeah, this is really nice, to be honest. This is really nice. Also, there can be this negative correlation. What that means is that the price moves somehow, and or that the price and moving average relationship, they go against each other. Yeah, I hope that I explained it well. But like, just by looking at the chart and the indicator, you can see how it works. If I want to get more divergences, let's say, I can change the correlation length to something like 20, and then you can see that I get a lot more signals here. Yeah, so it depends. Then I can also do is that I can change the moving average length to 20 and change this to 100, and you can see that now it evens out. Yeah, so this is quite nice, to be honest, because like this shows you the sideways trend or the change of the trend. Yeah, so I like this very much as well. Anyway, you have the source code. I will show you the source code once again here. So just you can see it here. It's nothing difficult. Yeah, code it for yourself and see if you can use this in your real life trading. So yeah, this is it for this video, and I will see you in the next one. Bye.